Dear students, welcome you all to the session 6 video of chapter Capital Structure, Financial Management 5th semester BCom. In the previous session, session 5 of chapter Capital Structure, we have seen the meaning of combined leverage. Combined leverage is the combination of operating leverage and financial leverage, and it measures the relationship between sales and earnings per share. That is, combined leverage measures the magnified impact on earning per share for a given change in sales. In this session, let us work out problems relating to operating leverage, financial leverage, and combined leverage. The first problem, problem number 1. Calculate operating leverage, financial leverage, and combined leverage from the following information. The level of output, 5,000 units. The selling price is rupees 10 per unit. Variable cost is rupees 4 per unit. Fixed cost rupees 10,000. The bank loan interest amount is given rupees 4,000. Tax rate is 40%. So we have to calculate operating leverage, financial leverage, and combined leverage. So here we can see that the capital structure does not consist of preference shares. Now first, we have to prepare a statement of income. Now, the statement of income, the format is this way. We know it. Sales. Sales is 5,000 units into 10 rupees per unit, 50,000. Less variable cost, 5,000 unit multiplied with 4 rupees per unit, 20,000. Amount is 20,000. Now, contribution, sales less variable cost gives us contribution. So, contribution is equal to 50,000 minus 20,000, rupees 30,000. Less fixed cost. Fixed cost is rupees 10,000. 30,000 minus 10,000 gives us 20,000. That is EBIT, earnings before interest and taxes. We call it as operating profit. Less interest. Interest amount is rupees 4,000. We deduct interest from EBIT. We get earnings before tax, EBT. So 20,000 minus 4,000 is equal to 16,000. From EBT, we deduct the tax. Tax is 40%. So 16,000 into 40 divided by 100. 40%, 6,400. Tax amount is 6,400. So earnings after tax, EAT, is equal to 9,600. If preference dividend was there, we are supposed to deduct the preference dividend and then we get the surplus profit. So in this problem, preference dividend is not there. So earnings after tax itself becomes the surplus profit for the equity shareholders. So we have prepared a statement of income. All the aspects are included. So we have found out the contribution, found out the EBIT and EBT. Now let us find out the operating leverage. Operating leverage is equal to contribution divided by EBIT. Amount 30,000 divided by 20,000, which is equal to 1.5 times. What does it mean? For a change in the sales, EBIT will change 1.5 times. So we have financial leverage. Financial leverage is equal to EBIT divided by EBT. 20,000 divided by 16,000 is equal to 1.25 times. Next is combined leverage. Combined leverage can be calculated this way, that is contribution divided by EBT. 30,000 divided by 16,000 is equal to 1.875 times. Combined leverage can also be found out using this formula, that is operating leverage multiplied with financial leverage, that is 1.5 into 1.25, which is equal to 1.875. So here we have prepared the statement of income. Afterwards, we have found out operating leverage, then financial leverage, and then combined leverage. So combined leverage we have found out using both the formula. One is contribution divided by EBT and the other method is operating leverage multiplied with financial leverage. Now, we'll go to the second problem, problem number 2. Here again, calculate operating leverage, financial leverage and combined leverage from the following information. We'll see the level of output is 10,000 units. Selling price rupees 116 per unit. Variable cost is rupees 46 per unit. Fixed cost is rupees 3 lakh. Tax rate is 50%. Interest on loan rupees 1 lakh and preference dividend rupees 50,000. So we'll have to note the point. In this particular case, the capital structure consists of preference shares. So when preference shares are there, the calculation of financial leverage as well as combined leverage is slightly different. We have another formula. We'll see that now. Now, first, what is the first step? The first step is we'll have to prepare a statement of income. So sales 10,000 units multiplied with 116 per unit. So 11,60,000 less variable cost 10,000 multiplied with 46, 4,60,000. Contribution is 7 lakh less fixed cost rupees 3 lakh. So EBIT is equal to 4 lakh. Less interest is 1 lakh. EBIT less interest is EBT is rupees 3 lakh. Less tax. Tax is 50%. So 3 lakh into 50%. So it is 1,50,000. So earnings after tax is equal to 1,50,000. Less preference dividend. Preference dividend, the amount is 50,000. So surplus profit or earnings available to equity shareholders, it is 1 lakh rupees. So first what we have done is we have prepared a statement of income. Now we will find out the leverage. So first one, operating leverage. How do you find out? Contribution divided by EBIT. 7 lakh divided by 4 lakh is equal to 1.75 times. Financial leverage. Now here you can see the formula is different. EBIT divided by EBT minus preference dividend divided by 1 minus tax rate. I repeat, EBIT divided by EBT minus preference dividend divided by 1 minus tax rate. 4 lakh divided by 3 lakh minus 50,000 divided by 1 minus 0.5. So 1 minus 0.5 is 0.5. 50,000 divided by 0.5 is 1 lakh rupees. So 3 lakh rupees minus 1 lakh rupees. So here it is 2 lakh rupees. So 3 lakh minus 1 lakh is equal to 2 lakh. So 4 lakh divided by 2 lakh is equal to 2 times. Financial leverage is equal to 2 times. Combined leverage. Combined leverage, the formula is contribution divided by EBT minus P preference dividend divided by 1 minus T. Here it's equal to 7 lakhs, that is contribution, divided by EBT 3 lakh minus preference dividend 50,000 divided by 1 minus tax rate 50%, 0.5. So 3 lakh minus 1 lakh, which gives you 2 lakh. So 7 lakh divided by 2 lakh is equal to 3.5 times. In another way, we can calculate, how is it? Combined leverage is equal to operating leverage multiplied with financial leverage. So operating leverage, we know it is 1.75 times and financial leverage is 2 times. So 1.75 into 2 is equal to 3. So in this way, we have found out operating leverage, financial leverage and the combined leverage. So we've seen the first problem was a situation where preference shares were not there in the capital structure. The second problem where a situation where preference shares were there in the capital structure. So two different ways of calculating. So we have calculated operating leverage, financial leverage and combined leverage. Students, I hope you have understood this. If not, please do inform me. Okay, thank you.